Okay, so today what we're going to be getting up to is I'm slowly pulling together a streaming system that is going to allow me to actually stream data, basically streaming my live trading sessions every single day. So we're actually going to be putting together a recording system in the office, so I can actually stream to you live every single day, which would be awesome. So it's almost going to be like a morning trading session, and I can walk you through some of the trading opportunities that I'm having a look at. So obviously it's going to be quite transparent. There's going to be quite a lot of information that I'll be sharing directly with you. But yes, slowly but surely we're going to get the recording devices up and running and streaming to our YouTube page and stuff. That's just taking a little bit of time, and I'm testing out some new software, so if it's a bit fuzzy or making some noise, just bear with me. We're getting it all fixed up. But basically we're sitting now Friday afternoon, 19 minutes past 1, and this week has been a very tough week for me. I landed up hitting some terrible losses on one of my retail accounts. Luckily, I basically aggregated it and covered about a 4.5% loss on my account, and then I had two other clients' accounts based in that retail account. So for some of you who may or may not know, I trade retail clients' accounts, and then I also trade institutional money as well. So I work with I've just started working with a team based in San Diego to trade some retail portfolios, some institutional portfolios for them. So 4% is one of the biggest losses I've hit on an equity account. What had actually happened was, I'll show you now. Just to make it clear to you, I like to be as transparent as I can be. Obviously this is pretty private information I'm sharing with you, but just want to make it clear that all of us do experience losses. This position was, in all matter of the facts, definitely my fault. More specifically because right in the beginning I started out really not doing well on the position. I entered way too early, monitoring. Actually, it was a monthly time frame that I wanted to trade. Meanwhile, I was getting stuck up in the hourly time frame, so I wasn't very happy with it. I actually only entered it on my retail trading account. I didn't enter it on some of my other portfolios. So the account I'm on now is actually the retail account. So it holds quite a small amount of funds, only about $2,000. And the account was going very well. It was up to about 12.5% profit over 2 months, and this position actually cut out about 22%, which is the largest loss I've ever hit. But effectively what was happening was I was having a look at the weekly chart over here. So if you have a look, I was basically watching this resistance level right over here, and I was watching. The position was sort of stalling over here, and I was thinking, okay, maybe it's going to sort of hit that level and I might be able to actually come for a pullback, because if you have a look at the stochastic, it was sort of starting to cross that level. So my stochastic was starting to cross my MFI, was looking relatively good, and unfortunately I entered way too early. So I entered on some small positions holding its way up, some sell orders, and I entered on some buy orders as well to cover my position. Unfortunately, I closed the buy orders out way too early. If I hold them all the way to the top, I would have been able to cover all of my losses. And next thing, running into this week, we just had this massive bullish spike. And because I was digging into so much loss, I was very unhappy with the position. I wanted to close it out, but I was speaking with some guys and they've just basically said, just hold it. If you're going to lose that 12%, just lose it. It's better to rather protect the deposited account rather than protect whatever profits you made, because it was, I mean, it was $100 profit. It's quite a small account. So basically what I did was I kept on holding sell orders, and then it just got a little bit dangerous. And what I decided was I was just basically going to cut my losses and make the money back. That's a lot easier. It was the biggest loss I hit. And in the past 3 years of trading, I've never run into this. But once again, losing $100 for me is not a nightmare. So I decided that I was just going to cut it, and you won't believe it, lo and behold, this is that resistance level I drew. I was sort of holding into this area, and I started to cut into basically the entire account. It was less than a 10% drawdown, which is fine, considering that it's just a very small retail portfolio. If it was an institutional portfolio, I limit my drawdown at 1%. So I basically won't lose more than 1% on any position. So obviously I was being much more aggressive, but I decided to cut into this loss here. I just thought, you know what, if this market keeps on moving up, because you can see there was a neckline, it broke right over here. And unfortunately I was selling into that neckline very stupidly. So I'm just basically showing you a mistake that I made, and the market turned and it's just moving down. There's news that came out, US is going to back Japan with sanctions against North Korea, which is obviously going to strengthen some of their ties, and obviously there's some good back scratching that's happened, which has made the Japanese yen recover hugely. And unfortunately there was some other fundamentals that went into it that I just wasn't able to hit properly. So what I'm basically going to do on this position is leave it. I'm not really interested in approaching it again. But also what I'm going to do is probably hit a few more aggressive trades and make back the 20% drawdown. So the 20% drawdown is of profit, and the realized drawdown is only about 4.5% of our deposited equity. So it's a very small loss. For a retail account, it's very, very small. But basically what I'm doing now is having a look at some positions in the market, and what I want to do is just give you some information on it that I want you to try and take from and learn from. So obviously that's a problem I could have hit. I'm still analyzing it and working on the position. I could have done a lot better, and unfortunately, if I go back here, the US dollar Japanese yen was another option. If I hit the US dollar Japanese yen, I would have hit that trade almost perfectly. I would have made about a 15% gain on a single position, and lo and behold, and sorry about the emails coming in. Lo and behold, unfortunately, it was just a part of what we had to do. So yeah, it's just part of the game. It is the biggest loss I hit, but luckily I'm happy it's on a small account. I'm actually learning so much from trading a small account again. Back in 2016, moving very large portfolios sort of took me to the point where I didn't really care about the dollar value. I just cared about the percentage. But now, on a smaller account, the dollar value matters a lot more than the percentage. And it's a difficult point to get back over. But basically what I'm having a look at now is I've been analyzing the US dollar CAD. If you have a look at week 4's trading plan for July, every single opportunity we sent out has been hit perfectly. So some of my traders, myself as well, we've made a massive amount of money off of it. So you can see going into, I'll actually open up the trading plan. Let me open up the PDF file. Sorry, it's quite windy at the office. Trying to find it. Okay, so weekly trade plans for July. July week 4 briefing, you can have a look. Okay, so one of the trade ideas we came up with back in, let me actually open up week 3 for you. And as you can see, to all of you students, we've sent these out via email Sunday evening, beginning of every week. All of this stuff's verified. No reason to debate it. Okay, it was actually, I think it was week 2's plan that I put the Japanese yen, the ZAR US dollar in. Oh goodness, I actually didn't. Let me have a look. Oh yes, I was focusing mostly on... Okay, no, I didn't alert. I didn't put it in the trading plan. I do remember I alerted it out to the students. But okay, let's go back to week 4's briefing, which is over here. So basically on the ZAR US dollar, I had alerted out to some of my students and also to my team of traders that I was watching it closely. And sorry, I'm just watching a position right now, which is not going too well on me. And I'll explain that to you now. Okay, back to, so basically trade idea ZAR US dollar. I alerted back right in the beginning here to some of my students, and we held this up to the previous range, and lo and behold, what I'm working on now, I just closed out my position here. It wasn't going the way I wanted. I made about 1 pip profit, which was very uncool. I actually closed out my long on my institutional portfolio. But you can have a look here. Basically, if I go into the hourly, we had a lovely downward trend, support line plus a horizontal support line. If you have a look in the daily, we sort of had a break, a test, slight break up, retracement, which we see often, and then a break back above that level. There was a lovely spinning top right there, followed by a nice bullish move, some exhaustion, followed by a bit of a flag, a pennant, and then a retest straight back down. And I know of one of my traders caught this double top and shorted it right back down to the bottom. He actually tried to hold it back down to here and covered his position about here. And I said to him, it's going to move back to this resistance area. So he covered his position, opened up a buy order, and he's held it up to the top. So he unfortunately cut out half of his gains, thinking it was going to move back down into this area. I'm just making sure the recording's running. Okay, so he unfortunately he fortunately hit that double top, but then made his way back down and didn't catch it. So we had a look at this resistance area. It was testing this resistance here, and I had a funny suspicion it was going to test anything between this area up to this area, and it sort of caught halfway in between. I entered on a long, and now what I'm having a look at is seeing if I can short it, because obviously in this area here you can see that it's tested, followed by a double top here, and I'm hoping if it's going to hit a double top here. But unfortunately I haven't been able to catch a good short. I did short it on an intraday right now. If you have a look here, it's forming up a V wedge. I know there's so many different names to all of these things, but you can see it's forming up a V wedge, and there's this downward, there's a support line here horizontally that's sort of been tested, broke slightly below, formed back up, and you can see here it's sort of testing. So I had entered in on this position around about here and hold it down, closed out my position here because I wasn't too happy with this retest, this sort of perfect bounce. Re-shorted here, hoping I could hold it back down, and once again hit a double bottom, closed out here again. So I made about 2 pips on the first trip around, 1 pip on the second trip around. I wasn't very happy with that position. So yeah, basically what I'm having a look at is seeing if it's going to show direction. So I'm going to probably move back out to the hourly chart and see if I can hold this position. If it breaks below this area here, which you can see is the 1257 region, I might try and see if I can hold back down to the bottom. Otherwise, if it's just sort of trying to gain momentum, it's going to break out back to the top. I'm going to see which direction I'm going to hold. I'm expecting a strong move. Also going into Friday, we are the last day of the week and the last day of the month. So that is also important to have a look at. When we're coming into the last day of a week or a month, you see some interesting moves. Obviously, market is trying to prepare itself coming into the next year, the next month, and you're going to see some interesting things happening. So obviously I'm going to see where this daily candle ends up. So you can see right now that there was a spinning top followed by this sort of daily candle. It's not really finding direction. So usually when we see these kinds of candles, sort of if you have a look down in this area here, you've got sort of a high-ended spinning top followed by a small bullish engulfing candle. That would have been a lovely entry point moving back up to the top. And you can see that sort of turned the market. If we have a look back here, you've got sort of the same thing. Just give me a second. Let's go back. Okay, so if you have a look down here, you've got sort of the same thing. Obviously, there was one there, followed by a bearish move, another there. So this is what we call signal candles, and you can see there was a signal candle here, followed by a nice bullish engulfing. So I would have entered on the top of that bullish engulfing and hold back up to the top. And obviously now, even though it's a spinning top and this next candle's body is opened lower, it's not really showing much direction. So I think it might go back down to the downside, but in terms of momentum, you can see the stochastic is still showing a bit of momentum, but the cross has split twice. So you can see it's trying to cross back up to the top, which is a bit worrying. And you can see on the MFI, we've got that test of the upper region. If we have a look at the MACD, which sometimes I don't use too much, there's not much direction showing whether it's going to be a sense of divergence or something. Obviously there was some bullish divergence showing here. You can see on the test on the MFI, it's showing momentum to the upside. So here, if we see a move back down to the bottom, I'm going to try and short it, see if I can hold it back down to the bottom. Mainly make some money back on this retail account. I'm really not happy about such a big drawdown. You know, on my track record, it's important to show that I can manage money well, and obviously such a big hit has made it look like absolute crap. But you know, we take it on the chin, we move on, we keep on going. Big problem I've got here, well, not a big problem, it's an intraday problem, but it's a long-term solution. Having a look at the US dollar CAD, obviously you can see here we had a test back down to the bottom. Lovely retest of that support. If you have a look, let's try and, sorry, I've got multiple screens here and I'm only recording the center screen, so if we've got an issue, you know why we got it. So you can see down here, we had obviously gold moving right back up to the top. This is back in, you've got sort of January 2015. So obviously going into a new year, you're also going to see interesting moves. So you've got this retest of the support, a breakdown, followed by a retest of that support and a break back up. That would have been lovely to trade. I really would have liked to trade that. And you've just sort of got price moving within this sort of range here. So if I, let me just get some lines going here that aren't, sorry, everything is red right now. It's just red today. You see, it's been a red week for me. But let's try and see if we can make it. No, blue's not psychologically good as well. Let's make it green. I like green. Okay. Oh gosh, people must think I'm talking to myself here. Actually, I am. You're just listening. So I feel better now. Okay, so obviously you can see here we've got this sort of upper resistance region. Come on. Oh, okay. Anyway, So we've got this upper resistance region sort of in this area here, followed by this lower range. And now this is the new lower range. So obviously this new lower range, I'm not going to put it over all of those, but you know, I'm just trying to show you. Okay, so we've got three ranges here. We've got range, we got the new range, old range, and the breakout range. So this breakout, the reason why I call it a breakout range is because if you look on the weekly, this is a massive breakout range. This is huge. I mean, being able to short this would have been awesome. But yeah, you've got this massive breakout range, followed by this move back down to the bottom. And now we're sort of sitting within this range. So obviously you can see there's room to move downward, which is obviously if it does break this lower position, I'm going to see if there is room to move downwards. Obviously the CAD is strengthening slightly on better oil numbers. You know, their demand is becoming a lot better, but so is the US. You know, the US has upped its exporting numbers of gasoline and jet fuel. They're upping their production numbers of a lot of things, and this is obviously due to what Trump is doing. Trump is having a look at also the IPO for Saudi Aramco coming out in April 2018. That's going to cause massive volatility to the oil price, and because the US is obviously relying heavily on oil production, and so is Canada. When you look at a US dollar CAD, it's slightly difficult to see strong moves to either end. Say, for example, the oil price strengthens heavily against, you know, CAD Japanese yen. You're going to see the CAD strengthen hugely against the Japanese yen. But with the CAD US dollar, both of them are weighted heavily against the oil price. You don't see a strong move from time to time. But obviously you can see here CAD's winning. That's mainly because the US dollar has slid in the past month, past 2 months. Obviously they've been seeing a lot of strengthening in numbers, but the currency is still sliding slightly. So obviously you can see here on the outlook, we've got a lower range testing the support. Obviously we're going to enter on a buy, see if we can hold it up to the top, which is what I've done. So if you can see here, we obviously had a signal candle followed by a retest back down to the bottom. But the big one that I noticed was this bullish engulfing candle, which I really liked. This was a great bullish engulfing candle, and as you can see, if we look closely, I basically entered just before the top of that candle, and I've held it up to the top. So I've got some good gain on this position. So you can sort of see I entered just below here, and I didn't enter over here going down, I entered over here going up. So I entered on this bullish candle because it broke above this wick, and I really liked this sort of signal of this level, sort of nice bullish candle here, not too big, and then followed by this big bullish engulfing candle. I felt that was good confidence. But obviously going into this position here, you can see I've got two buy orders over here, which is obviously a bit quicker for me, I will admit, but that's mainly because I'm focusing on the daily chart. And if you have a look at the daily chart, obviously we've got about, give or take, let's have a look, we've got 9 hours left of this daily candle, give or take. So obviously this daily candle is looking to find some direction. You can see it's been trading very flat for the day, slightly bearish right now, but should we have a good close into the day, we're going to see this candle move back up to the top, which brings me to the sort of news we're looking at right now. Let me just open that up for you. Okay, so going into the end of today, the next 48 minutes, we're going to have the gross domestic product annualized, so GDP annualized. Okay, we're still recording. Oh goodness, I hate these adverts. Okay, so you can see here, beginning today, we had some numbers come out on the Japanese yen. Obviously, lo and behold, my good luck, all good. And unfortunately I didn't catch it. And you've got some stuff coming out, so the GDP product and product price index, you've got the gross domestic product annualized, so GDP annualized. So they're going to have a look at what what has been the sort of monetary value of goods and services coming out. So obviously you can see a higher reading is going to be bullish for the dollar and a lower reading is going to be bad. Coming into the Fed release, let's see, where is it now? We've got Friday. I want yesterday. This week. Let's go back to this week. Okay, so the Fed's monetary policy statement basically came out saying that they're going to unwind the balance sheet sooner than expected. So if you had a look at one of the recent, how do I call it? One of the recent weekly plans. I think it was week 2's plan. Let's have a look. By the way, we've still got some seats left on these weekly plans. We're giving away 25 weekly plans, so people can actually see what we're trading every single week. Obviously, slowly but surely, you're going to see we actually are right about a lot of things. We just not necessarily are entering on all these positions. I'm just trying to see where I released the information about the monetary policy. I think it was week 2's briefing. Yeah, okay. So if you see, we're looking at week 2 here up at the top. Let me just show you. Okay, so week 2. Okay, so Friday non-farm payrolls, I spoke about that, and then Fed balance sheet, bond market worried. So Fed's basically said they're going to unwind about $4.5 trillion on their balance sheet, mainly in bonds and government loans. So obviously they're trying to shrink their balance sheet, make sure they're not overexposed. They want to bring down inflation. They want to try and fix the economy. But obviously this is bad because there's less lending available. There's a lot less money moving around, and basically they announced this back in week 1 of July in the FOMC minutes, and they basically said, listen, we're going to do it at some time this year, and we all thought it was going to be later in the future. And next thing, the monetary statement comes out, they're saying they're going to release it a lot earlier. So obviously this is interesting to see because they know something we don't, obviously. You know, people are sort of saying, why are they quitting the race when they're doing so well? Obviously, numbers coming out of the US are looking awesome. They're going to spring break right now, so job numbers are up, consumer numbers are up. But unfortunately, those credit numbers are up as well. Consumers are spending majority on credit. And they're obviously worried about that. The property market over there is looking amazing. I think from an article I read, don't quote me on this, they did say that numbers are looking intensely good. All-time highs quoted by one of the Bloomberg reporters, which obviously could be completely inaccurate given some of their reporting. But going back to this trade, so we've also got Canadian news coming out here, gross domestic product month on month. That's 44 minutes away, but I'm not entirely sure how much that's going to impact the numbers. Obviously, we want that number to be good. If we're in US dollar CAD, we want that number to look bad. So if we're in US dollar CAD, we're looking for a bad number on the month on month. So the number that they're looking at coming out with is 0.2%, unchanged from last month's number. So we're going to try and see, and obviously US numbers, we're going to try and look at some good US numbers coming out. Since we're trading US dollar CAD, we're trying to see the US dollar strengthen into the end of the week and the CAD weaken into the end of the week as well. So obviously I'm trading a technical and fundamental based position, but the biggest one is I'm going to have a look at what the oil rig count is going to be for US oil. Obviously if that oil rig count has gone down, it means they're drilling less, and the oil price, the US oil price, is going to go up a bit. Last week's number cut by 1 rig, previous number was down by 2 rigs, so well below 2 rigs. So 3 weeks ago it was 763, pushed up to 765, so added 2 rigs. Last week 764, pull down a rig. I think this week we can see a lower number. We can see a big strengthening in that oil price. The FOMC member Kashkari's speech coming out. I'm not entirely sure. I've really not followed some of his information. But the big one, I'm going to have a look at this GDP annualized. If we can see a strong reading, we're obviously going to see some good numbers coming out, which is going to strengthen this pair. So that's pretty much why I think this candle is trading pretty flat and, oh, excuse me, slightly bearish, is because there are some big numbers coming out in about 42 minutes time. So obviously, depending on how those numbers come out, we're going to see a strong move. And what that strong move is going to do is either give me a good move to the upside, which obviously we're all hoping for, or a move to the downside, which is probably going to let me either cover my position on a sell order. So if the numbers come out really, really bad, you can see I'm in here. Unfortunately, we had a breakdown of on a 5 minute. It was a beautiful position going up. I opened on a breakout and we just had a cut back down. But I'm going to hold that because it's a pretty small position. Basically, what I'm going to see is going into, we've got about 7 more candles to form before we go into the 44-minute release. I'm going to have a look and see if the market is going to move up to the top. Obviously, it's got this resistance area it's been testing. Market seems like it might want to move. It's sitting within a range. So obviously sitting within this range here, let's actually get out some of our green resistance lines. Okay, so we've got right over here, we've sort of got this range that is trading within. Obviously opening up this new candle, you can see this dotted line shows the new trading session. So price has pretty much only moved between these two green lines for the entire day. And obviously what I'm looking for is price to move back up. But if I see a breakout of this level, price moves back down to the bottom. Below this level, obviously the US numbers look bad. I'm going to short sell this position. I'll cover this position, close it out. That's in a bit of profit. Both these positions are a little bit of loss. So what I'll do is short sell this position, hold it back down to the bottom, see what the market looks like. But if we are able to get back up to the top and the numbers look good, I'm not going to add to this, because if I have a look, let me actually open a stop here for this position. If I have a look, I am looking to hold it up to this area over here, and that's a bold move. That's a very bold move on my behalf to see if I can hold up. Obviously, basically what I'm going to do is see if a price can move back into this area here, and you can see retest these levels. Hopefully if it breaks above, it's going to start fighting with this range over here, this mid-range. So what I'll do is I'll move my stops up a little bit, and I'll basically hold one tight, so I've got 3 positions open. I'll hold one tight stop, one looser stop, and one stop at my entry points, which basically means I've got one position that might close, one position that might not close, and one position that will just close and break even if the market turns. But what I'm going to do is see how much I can hold up to the top. Total profit on this position on all 3 trades is looking at about $120 profit, which will cover my loss and add back on this retail account. Obviously this is an aggressive move, but lo and behold, I'm a little bit angry that I made that loss, and I'm making good for my investors as well. On my institutional portfolio, I have actually entered on this position here on a substantial amount, but sorry about not being able to show you. I prefer to keep my institutional portfolio off the recording. So I am using my retail accounts. I'm using sort of a relatively small amounts, but still showing you exactly what I'm doing, because I don't like to use, a big $100,000 portfolio. When I'm talking with my students and with new prospects, I like to use an account that they might start out with, show them how I'm working on my positions. because then we're talking the same knowledge. You know, for me on my institutional accounts, I'll enter down here and hold up all the way to the top. I'm not even going to look at the position. If it hits it, if I can cover it half profit, I'll do that. But here I'm going to be very careful. I'm opening up multi-layered positions, and I'm basically doing my absolute best to see what I can do. But as you can see also here, if we have a look on the weekly chart, you can see there's a really sort of tight spinning top dragonfly. I kind of lose track of the candlesticks. I know what they're supposed to look like. I don't necessarily know the names. So if you have a look over here at the top here, we've got a very similar candlestick followed by that next candlestick, and then a bullish engulfing. So obviously going into next week, if I can see a bullish engulfing candle going up to the top here, I'm going to be very happy to see that. You can see the stochastic is also quite oversold. The MFI is moving down into that oversold region as well. So obviously people are going to be pulling out a lot of their sell orders at the support level, and a lot of technical traders are going to be hitting this trade going on bullish positions. So obviously you're going to see the market moving a lot by money flow indexes, and going into next week, obviously, as long as this news today covers my loss. So what I'm going to basically, what I'm basically meaning is I'm hoping that the news today shows that it wants to move bullish, and then following into next week, we might see a flat candle moving into the non-farm payroll numbers. But from what I understand, non-farm payroll numbers are going to look very good. US is currently in spring break, which obviously means majority of the retail stores are employing a huge amount more. All of the entertainment sector companies are employing a lot more, so your restaurants, your service orientated people. So basically, if we have a look going into next week, let's see if this is loading. Okay, yeah, going into next week, if we look into Friday, we got the unemployment rates. So obviously you can see it's been a slight pickup the past two numbers, followed by we got non-farm payrolls, we got the trade balance, having a look at what's their export-import numbers, unemployment rates in Canada as well. So obviously those unemployment rates in Canada are looking good. It's going to cancel out the unemployment rates in the US a bit, but US has stronger numbers than Canada. Previous on the week, we don't have too much. We got some big stuff coming out, the ISM manufacturing PMI coming out, and there is a little bit of obviously information coming out here. Unemployment rates, that's on German. So there's not too much coming out except going into the next week. So obviously if we see good numbers this week, and we see some good numbers this afternoon in the next half an hour, this is going to cover my position, give me a nice bullish candle, and hopefully going into next week I can see another bullish candle moving into there. Oil prices are at strong resistance levels, so we might see a pullback in oil prices, which is obviously going to push up the price on the CAD as well. CAD is going to weaken a bit. So I'm basically trying to see if I can enter a trigger point here, and then it's smooth sailing. You know, this is almost like the takeoff of a plane. Takeoff and landing is the most difficult things to do in a plane, but everything in between is easy. So let's call this the takeoff, and this is going to be the landing. We're looking at, let's say, give or take, it's not showing me my, we're looking at give or take 6 to 7 weeks movement. Obviously, if we're unlucky, it might push into 12 weeks movement. But yeah, that's going to be one of my positions I'm going to hold. US dollar CAD, looking on the weekly, looking on the daily. Like I said to you, this information, risk disclaimer complete, educational purposes only, showing you what I'm doing. I'm not telling you what to do. So any information you take from this video, please make sure use it carefully, use it wisely, and we're going to be doing a lot more of these. We're going to have some nice recording systems put up so we can stream live as well. That's going to be coming up soon. So everyone, thank you so much for tuning in. Thanks for watching. hope this information helps you out. And also, basically, what we're going to be doing, like I said, we did offer up 25 seats to the trading plans. If you want to get access to these trading plans, have a look at what we're doing every single week. You can use that as well. Let me just give you a bit of a teaser. Friday, as you can see, this is the trade plan for July week 4. I can even show you, let me actually show you the email sent out so you know this information is true. Let's have a look. Friday, July week 4 trading plan. Obviously you can see here we've had an amazing plan come out since yeah, okay, so we've obviously had a really strong week coming out, and my July week 4 briefing, you can see this was sent out at 12:30 in the morning, lo and behold, and you can see, so this is from the plan that we're using. I was having a look at US oil. So basically what I was saying is, as seen in my previous report, I called for a bullish move to $50. I was talking about OPEC release that they were raising production. OPEC, non-OPEC members met Monday in St. Petersburg. And I basically said Reuters showed that everyone had extended their bullish wager on US oil, and they had cut production going into the evening. So going into the evening as well. So that was also interesting to see that I'm actually going to get out some information now. So anyway, I showed this. I said that I was in on some buyer orders. Obviously they were very, very bad buyer orders. I pulled back down to the bottom. I entered right over here late in that evening, and I hold back up to the top. I mean, not late in that evening, early in the morning. So that's why I was up till so late. Monday morning I entered before the St. Petersburg meeting. And let's just have a look at what happened to oil. Here we go, CL Brent. We've got this, we've still got the information up. Oh goodness. Now I've lost my... there we go. Okay, so obviously going into Monday, Friday we had a massive sell-off. Obviously very worrying information talking about this candlestick right here, talking about OPEC raising production. Like you know, I had orders over here. I entered quite a few more orders early morning, so if we have a look, you can see some of my technical analysis lines. Big V pattern forming up, V-shaped wedge. I entered on some heavy positions on my institutional account and a few positions on my retail account. I held them up. I sissied out a bit, cut a few early. Institutional accounts I cut out late. Made one of my biggest gains on oil ever before, and that was all out in the weekly trade plan. I did have a student, he made about 250,000 Rand. That's about $20,000 on this position, and that was from the weekly trading plan. So you know, this weekly trading plan, there are some awesome nuggets. Let's just go back to it. This weekly trading plan, you can see there are some awesome stuff in it. We had the Aussie dollar CAD that played out amazingly, but as you can see, it is extensive. We analyze the markets, we have a look at the economic calendars for the US markets, the Euro markets, British market, and then I give a full economic plan. Let's just give a stop. Oh goodness, sorry, my mouse got ahead of me. You can see here I'm basically adding in what's happening, my personal comment, what's happening, personal comment. You can see going up all the way to the top, you got event details and Morgan comment. So you can see I'm basically commenting on multiple markets in a single plan. So this plan is what we use to, obviously when I'm working with my institutional accounts, I have to show them what I want to do with their money. I have to also know what I want to do with my money. So I plan my target and I execute, and here I executed and we made a serious difference. So obviously really happy with that. If you want to come on board, have a look at our training academy as well. So what we do is we teach people how to trade, invest, manage their wealth properly. You can have a look at our website. We have links down below in the description. So let me just pop the site up here. You can see all the information. There's some videos I've uploaded, and if you want to have a look at our training, we obviously have got 2 academy accesses. So we've got MSE Academy access, which is $495 for 12 months access. You get 50 hours video content, 20 plus assessments, online mobile access, so you can actually access directly from a mobile app. Unlimited coaching, so you coach with me directly, hassle-free refund. If you're not happy within the first week of what you got, you can ask for your money back, you get your money back. MSD scholarship, if you're under age of 25, you get a 50% discount. You get granted access to the academy, trade profiles built for you as well. So we actually give you access to learning how to trade like an institutional trader. We back you with money. We back you with our word, which can give you a lot of credibility in the market. Contact us directly, name, email, cell phone number, message what you want to do. You can work for us as well on our ambassadors program. Very soon coming up, we're going to be opening up an office to allow students to come in and trade portfolios for us as institutional traders. 5 to 6 month plan, but really looking forward to that. Once again, thank you so much for tuning in. Let's have a look again. US dollar CAD weekly. Not too happy, selling off a little bit, going into this news. Obviously it's going to test this bottom range. News is bad. You're going to see me hold up to the top. News is good. I might cut these positions, go in for a short, hold it back down to the bottom. Hope you guys have an awesome week of trading. We are Friday, so obviously have an awesome weekend as well. We'll see you soon. Cheers for now, everyone.